Hello traders, welcome to Nimbus Capital Hot Takes, where we go through general update on current market condition, performance, certain noticeable stocks, and our views and opinions on them. We hope to do this once every 2 weeks to provide you with the bite-sized overview of the market condition. Let us take a look at the US market first. We have the S&P 500, the Dow 30, and the Nasdaq 100. There is no argument that US market have been underperforming in the past 3 months due to the tech sell-off. Year to date, the Nasdaq 100 have fallen 4.34%. S&P 500 have dropped 2.17%, while the Dow 30 have only dropped 1.17%. The difference in the drop is hardly unusual as Nasdaq 100 consists mainly of tech and biotech counters that are leading the sell-off. Although S&P 500 have its own fair share of tech companies, they are weighted much lesser compared to the Nasdaq. The Dow 30, having the least number of companies in its index, also fell the least because all 30 companies are well diversified across different sectors and they are all well-established big cap companies. This is a very good lesson that diversification matters, and it is always quality over quantity. In the short term, US market does seem to be underperforming compared to the Hong Kong or even Singapore market. However, do note that all 3 US indices are still trading well above their 200 moving averages. We shall refer to this red line as the 200 MA. That is to say, the long-term trend for US market is still up. From trading perspective, Nimbus Capital prefer S&P 500 as it is able to outperform Dow 30 most of the time. And when price retraces, it does not fall as much as the Nasdaq 100. It is the best of both worlds. Let's talk about the chip makers. Chip shortage have been the talk of the town since a few years back. Companies like Micron, TSMC, AMD, and Nvidia have gained massive returns since their 2020's bottom. However, the downstream companies such as AMD and Nvidia has been declining in price since November 2021. On the other hand, the upstream companies such as Micron and TSMC are still doing relatively well. Micron have closed at all-time high price on Friday at $97.36, slightly above its year 2000 high. TSMC also managed to achieve a record profit beating the estimate expectation. Price also closing all-time high at $140.66. Nimbus Capital also shared our bullish view on Micron back in 19 November 21, where we have provided a good stop loss and a target profit level. We hope that some of you managed to get the trade. You may find the link to this video in the YouTube description below. On the downstream side, things are not looking as bright. AMD have dropped 16% from its recent high, Nvidia have dropped about 22%, Marvell have dropped 11%. Even with these drop in prices, these companies are still trading well above their 200 MA. In January 2021, AMD retraced 26% from its high to $72 before making a rally back to $122. And in August, it retraced 19% from $122 down to $99. Similarly for Nvidia, price retraced 24% in February 2021, 17% in April, 15% in July, and 15% in August before making higher prices. That is to say, both AMD and Nvidia current retracement are aligned with their usual retracement value. However, from a trading perspective, it is still early to make any trade decision on AMD and Nvidia. We have profited 4 trades in 2021 on AMD, Nvidia, and Marvell. At the present, we have 1 open position on Marvell, while both AMD and Nvidia is on our watch list. Next, let's look at the automobile sector, both electronic vehicle or EV and the conventional. Among all the EV companies such as Tesla, NIO, Nikola, or the very recent Rivian, it seems that only Tesla is doing well with its price consistently above the 200 MA. Even then, Tesla have dropped 15% from early January high, and it is currently in a very wide-ranging mode. On the other hand, Ford and General Motors are doing quite well for 2022, and Ford is leading by hitting the all-time high closing at $25.19. Nimbus Capital is pleased that we have trade recommendation on both Ford and General Motors. Although not to forget, we have also taken our profit on Tesla back in November 2021. Let's switch our focus to the big tech companies. From their recent highs, Google have dropped 8%, Microsoft have dropped 11%, and Apple have dropped 5%. These three companies are still trading above their 200 MA despite the recent drop, and it is one of the reasons why we have just recently made a trade recommendation on them. On the other hand, both Amazon and Facebook dropped 14% from its high. Price of both companies have been oscillating about its 200 MA and have been ranging for quite some time. Generally, we will try to avoid trading counters with this kind of price behavior so as not to get stuck while the price is still ranging. While we have been monitoring Facebook for quite some time, we are still waiting for its price to break out of the resistance at $350. While not of significance, companies that were hyped up back in 2020, such as Lemonade, Palantir, Snowflake, DoorDash, and Peloton, did not perform well in 2022. All of them have fallen more than 50% from its all-time high hype price. Lemonade and Peloton are the worst, with the price falling more than 80% from its high. During 2021, we do have our fair share of attempts to trade these companies, but our results were not very spectacular. We have incurred 2 losing trades, both on Palantir, but we managed to even it out with 2 winning trades on Snowflake and DoorDash. But these winning trades were not smooth sailing as price almost hit our stop loss before hitting our profit level. Moral of the story, stay away from counters that are hyped up on TikToks, forums, or social media. The Hong Kong market. For 2022, the Seng Index, or the HSI, is faring better than all the US indices. HSI is up 4.2% for 2022. While we do not wish to sound like a salty wet blanket, we must still inform everyone that unlike the US indices, HSI is still trading very far below its 200 MA, and we have yet to see any higher low. One special characteristic of HSI is that the price tends to swing quite big and quite often around its 200 MA. If you are a contrarian trader who like to short the top or buy the bottom, HSI is definitely for you. However, for Nimbus Capital, we prefer the simpler and more predictable approach of taking one direction trade such as the S&P 500. Unlike US tech companies which are retracing from their high, Hong Kong tech companies are behaving in the direct opposite manner. They are bouncing off from their low. Companies like JD, Alibaba, Lenovo, Meituan have recovered at least 15% from their bottom. However, we do advise caution as most of these companies are still in a downtrend below their 200 MA or in a sideways movement. This might sound attractive from a long-term value investor perspective, but it could be risky for traders. Due to our core trading principle, which is not to trade against the long-term trend, we will personally be staying out of the Hong Kong market until we can see a higher high and a higher low. Now let's move on to our star performer, or so it seems. Singapore market, the Straits Time Index. The STI, not only has it recovered 7.8% from its low, it has also break out above its most recent resistance and also closed at 52-week high. This put STI performance ahead of both US and Hong Kong for 2022. However, there's a big but, and I cannot lie that almost all Singaporean traders will know STI performance is heavily affected by the three local banks, DBS, UOB, and OCBC. And by heavily, we mean that 27 other constituents can be underperforming, and as long as these three banks are doing well, the index will do well. The reality is not far from this, as the recent rally in STI were due to the three banks performing exceptionally well, with DBS hitting all-time high at $35. Both Jardine Matheson and Wilmar also have a significant weightage to the index and have also recovered about 7% from its bottom. However, they are still either ranging or in a medium-term downtrend. One notable company that have been performing quite well under the radar is Sembcorp Industry. Ever since its divorce from Sembcorp Marine, Sembcorp Industry have been able to reverse its trend and consistently keep the price above its 200 MA. Sadly, it has very little weightage on the STI. Unfortunately, everything on the index is underperforming. The maple trees have broken through their support. Both Singtel and Keppel are still in a long-term downtrend, and they are in the narrow sideways movement since 2020. Looking at the non-STI constituent, Singapore market does not have much to offer. Exceptional companies such as iFast, Franken, and Union Gas have all broken their support. They are now trading below their 200 MA. Propnex has also fallen significantly from its top. Given the recent property cooling measure, its recent price action is also somewhat muted. Nimbus Capital have traded all of these counters since late 2020. While our position was still overall profitable, we are set to see these long-term uptrends coming to an end. There are still a few good companies that are in very strong uptrend. Among these are UMS, AEM, The Hourglass, and Grand Venture. We have open trade recommendation on UMS, The Hourglass, and Grand Venture. We have recently taken profit from AEM, and our next trade is still pending. Singapore market in general have very little options. However, if we do manage to catch a good trending company such as iFast, Franken, and Propnex in its very early stage, the results are still phenomenal. As for now, congrats to those who are vested in the three local bank or STI ETF. Just be cautious of STI as it generally does not provide a good reflection of the Singapore market health. If you wish to receive trade recommendation on specific company, more in-depth technical analysis on specific stocks, regular webinar, stock discussion, do consider joining our paid subscription on Patreon. Link in the description below. Do like our videos and subscribe to our YouTube channel as we are a growing channel and it means a lot to us. Thank you very much for your support and have a nice day.